Hi everybody, my name is Adam Meyer. I'm back here with another video, and today I'm going to go over the S&P 500 projections and also the trading review, and I'm going to get into some research that I found online and also seasonality charts that we can use to look into the future where we can possibly anticipate farther moves. So let's get into it here. Getting over here to this article I read here on CNBC, they said that every day that something does not break is a good day, and we've kind of seen that happen here in the market. They also say the bank may have been the biggest and final break in the sector, and that's giving confidence towards investors and that the Fed has control of what's happening. They also say the market keeps waiting for something, but the Silicon Valley Bank that went under was that something. Could more banks go under? Yes, in the future. It could be a small trickle down. I read that in another article. But right now, we're not really seeing a lot of bad news coming out, and the market's pretty hesitant. Like, what are we going to do? We don't know what's going on. We have over here the economic calendar for the rest of the week. We have Thursday, nothing really too crazy, unemployment claims, but we're going to watch out for that. And then Friday, nothing too crazy either, and then we'll get into next week. This is just what I look at every day before I open up the charts and go forward. And I wanted to bring this up too as a seasonality index of the S&P 500. So keep this in the back of your mind of where price is. I'll link this down in the description if you want to look at it yourself. But you can see here in March we bottom out, and then we start to work up here in April. And then we pull back into May, and then we continue up through the rest of the year, just these small pullbacks. This is just a seasonality chart, so it doesn't mean it's going to happen. I've used these before, but this is an updated one where it ended in the 20-year range of the 2022. So it takes the past 20 years and averages it out, and this is what it does during that time frame. So this is just what I'm looking at here. So could we go bullish going forward? Yes, but there's a lot of fundamental factors that still come in. So we're actually seeing that line up with the chart right now. Over the end of March, we start to bottom out, and then we start to rally higher. That's kind of what we're seeing here in the seasonality chart compared to what's actually showing up now. And what are our predictions? Like, we've been talking about this for every video now, basically this entire week. We have this 2-day volume imbalance, and we were looking to go higher up here on the S&P, up into this range, and possibly even up into here. Today we finally hit 50% of this wick, but price action this morning, it did look like price wanted to come down, but it ended up going higher. I'll go over that in the trade review later. But just going forward, I think we could possibly see this high met up here, or we just stay stagnant here in this area for the rest of the week and we don't really do too much. We're at 50% of this SIBI here, so sell side imbalance, buy side inefficiency. So our 50% of that, and now we can just really just chill out and do nothing the rest of the week, or we can just keep ripping up or pull back. But ideally, these highs do look in mind. This is a nice daily closure that we're going to get here, so we'll see what happens. Right now, price, if it wants to go higher, it's going to break up higher and then continue to close bullish, or we're going to get a small pullback and they can give us a buy there. Or if it really wants to close lower, so if we get bearish closures and we still come down below this SIBI that's down here, then I'll be looking for lower prices. So I really want to see below that SIBI if we are going to go bearish, but right now it's looking bullish, so we want to see the SIBI hold. Getting over to the trade review today, I did not plan on trading the morning session, but it did give me a nice setup, so I did take the trade. The reason I didn't plan on trading the morning session is because during London we had a big move, and after a big move, usually the afternoon session sets up better. But I was on the live call that we do with our group chat every single Wednesday, and if you're not in that, let me know. We can get you in that. But this is what we were looking at here. I was looking at prices to possibly come down within this area into these equal lows. Well, these lows down here. These lows from London and also down here and down below this wick there. So after we saw that move up higher here at the market open, we wanted to see price work its way lower after having SMT divergence with YM. So I'm going to pull this up over here. This is the 3 charts that I used for my SMT divergence. Notice that we had this making a lower high but making a higher high over here, and then same with NQ. NQ was at this time making the higher high, where this was making the higher high and this was making the lower high. So this was the indication that price wanted to move lower. So I then start to mark up my charts. Where can price reach to? We have this gap down in here, and then over here we have this low and this gap here. But I took 90% of my position off within the BISI that happened within this area. So this is where I was looking at to take most of my position off, because that gap is going to act as a magnet in the market. Not financial advice, but it acts as a gap in the market to then go to. So then I was looking at these equal lows to be taken out, but then it came back, reversed, and then hit my break even. So I had 90% of the trade off at 0.75% on the day. So I was positive on the day. I was looking to get about 1.5%, maybe 2% if we did come down to this low, if it wanted to leave the station. But since it wanted to retrace back, it hit my break even, and that was completely fine because it pulled money out of the market. The whole goal for the day is to get your entries and then take partials along the way when the market gives money to you. So that's part of my trading plan. When it gives me money, I'm going to pull it out of the market. So the market doesn't need to give me anything, but when it gives me the opportunity to pull money out, I'm going to. So notice how I take it out at the low when it hits that 5-minute BISI that we had up on the other chart. We come up higher, and then it broke down below the low again, took more out. Came back, gave it room to breathe, came down again. I took even more out because I'm like, okay, it does not need to hit this low. If it does and hits the rest of my TP, cool. But at this point, I was like, okay, we should have dropped down already. So it's staying stagnant in this area during the 1, 2, 3 divergence move that I talk about in a few of my other videos. So I wanted to take out just to make sure that I was locking in profits, which I'm glad I did because it then came up and then hit that area again. So that's just what we were looking at within that area and the reason for my entry. So this is what you really want to find out for the day of why I was looking at this area. Look at this 5-minute gap right here. So it's the inverse gap. This gap came through, came back up, SMT divergence. We started closing very, very bearish. And I had my first entries within this area here in the 30-second time frame. Up within here. Let me pull this back. And when price shifted lower, I started entering within here. Pulled back down. So shift down. Came up into this area, pulled back. I entered within here. Came down. I was in profit. Came back. Hit my break even. I re-entered again once I realized that we were on a 15-minute volume imbalance within this area. And this volume imbalance was very key to me because it was from here to here. And it's going to act as a algorithmic resistance level. And as you can tell, oh, you don't believe in resistance levels in the algorithmic terms? Look at this. This is like tap, 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 tap. So I'm like, I got in again. I got in again within this area. Price came down, broke structure again. I entered more here. My stop loss was up above the opening range, opening price here from 930. Stop loss is above there, and I was targeting down within here. And this is why I took my first partials down here after that move there. And I did actually, now that I'm recalling it, I did take small partials here before that break even, but it wasn't really that significant, honestly. This is really where I was taking the bulk of my trade within here, and then also within here when the 5-minute structure was still playing in. So this is just what I was doing there, targeting this low, rest hit break even. After that, I'm done. Okay? So I'm done, and then I'm just waiting. And I want to show you what my model is, and this is my model I created myself. It's based on ICT concepts, but this is my own personal one that I created myself and what I look for. So in the 15-minute time frame, if I'm looking for shorts, which I was, because we had these equal lows still down here, we're going in the afternoon time frame. So I was looking at these equal lows and possibly getting down there. And I don't know about you, but this looks very similar to that area. So we came up above the high, we shift market structure, we come in the fair value gap, looking for a short. Until I get this confirmation on these lower time frames, as you can tell, over here we're on the 5-minute, but look at this here. Over here, we come up into the gap, here's like a 5-minute, this is typically what it looks like. Come up in, and then drop down. I needed to see price reject right here, drop down, show bearishness, showing willingness to go down lower again, retrace, and I was going to enter again on something like this, where it comes up in, shifts down, I was going to enter right here. This is where like I'm full position loaded in. Something like this or something like this, not as much, you know? It needs to really be clear. This is why I love my strategy so much, because I get to schedule in and really define my trades on the 1 minute and like 15-second time frames, and it makes them so probable, but you got to have a big deal of patience. So that's what the market teaches me. It teaches me a lot of patience. Within my chat, I was talking about this area here. So I'm watching price in this area, as you can tell. So it hit this high, we shifted down, and I'm looking at these lows. And unless you know how to really read price, I even put my markups in here. This is what I'm looking for. We never got that. We never got that area. See it right there too. We never got that area. And then we started closing up bullish. So when these 5-minute candles and the 15-minute candles start closing bullish within this area, it's like green light. Oh shit, we might be going in the other direction. And where's the buy side liquidity at? It's the consequent encroachment of the daily wick. I did not take the buy in there. It was not probable to me. That was something I was looking at. I was waiting for the 315 to 345 macro, but I'm up on the day already, so I'm chilling. I'm pretty good, happy with what I already did for the day. I did not need to risk again if it was not high probability. So then it ends up ripping up into that area within here, and that's where we ended up ripping up to. So it's like, if you really want to get something else out of this video, it's like, watch your areas and watch how it reacts in that area and know your setup. And if you want to take my setup, go for it. You know what I mean? This is a high probability setup. Go put in the work. Go look into like how this plays out over time, and even use my reviews. Keep watching my reviews and notice how I'm doing those as my entries, just like the one this morning, and then this one never showed up in the afternoon. You can see how here in the afternoon we bought up and then we retested this BISI, and then we started going up higher, and then you see the 15-minute closes within that gap as well. I really just wanted to see it break down. It never did. We ended up reaching up into there. Could you have taken a trade in this area? Yes, it's possible. But if you got 30 years of experience and you really want to take the trade, go for it. You know what I mean? So I'm not going to try to take something that is not highly probable and does not fit with my strategy, and it was not fitting with what I looked for. So if it was going to reach this area as I expected anyway, after that bullish close, cool. Am I not in it? No, it's fine. Like, we got to accept that as traders so we can grow and learn. You know what I mean? So we started moving up here with price, came up, retest, nothing really I like there, nothing up in here, nothing really up in here either. And then we hit the 50% of the daily SIBI again, which was, I'll pull it up for you guys right here. 50% of the SIBI as well, and 50% of the wick here as well from the daily wick. So those will act as a magnet if price is trading in that direction anyway. So I'm going to wrap this video up here. Let me know if you guys have any questions. Love you all. Take it easy.